we've hit every target we expected to hit. So we've gone from 200,000 ounces. I think the next resource was 1.3 million, 1.5 million, 2 million. As we work around drilling more and more of the asset, no infrastructure challenges, no national parks, no indigenous population. So it ticks all the boxes for location and where it's at.
And it's no rainforest, it's previously disturbed.
It's previously disturbed. It's farming. It's
farming land.
Called marginal farming country, cattle grazing country. The PEA that we had 184 million capex, so it's a manageable number. Rate of return was pre-tax was 51%. So it's
2 years payback.
2 years payback. All in sustaining under 700. Really, and the idea is to take that and upgrade it.
Hello everyone, this is Florian Munch. I'm here in Toronto at the PDAC convention 2020. And with me here today is Nick Appleyard, President and CEO of TriStar Gold, a gold exploration and development story based in Vancouver but working with a project in Brazil. So it's a pleasure to have you here, Nick.
Yep, thanks for having me. It's a pleasure to be here.
Can you wrap up the story, so the basic things, where you're working and what you're trying to achieve?
As we said, TriStar is a venture exchange listed explorer developer. We have one asset. It's in Brazil, in central Brazil, in Pará state. It's a gold asset, currently in feasibility study. Total resources are about 2 million ounces. The target is to produce a feasibility study, producing about 1 million ounces right now on a part of the project. Just a few facts and figures about the company. We've got nearly 200 million shares outstanding, 190 million, trading at somewhere around 30 cents, which gives us a market cap of about 60 million Canadian right now. And we're pretty well funded. We've got 6.5 million in the bank and another couple of million coming in the end of the month. So all the work we're going to talk about now, we're funded to complete. We're nicely funded right now.
Wonderful. Brazil, you've spent a lot of time there, you have a lot of experience. How's the, especially the region you are, how is that as a jurisdiction? And maybe you could also elaborate on the local things.
Absolutely. So Brazil, it's a mining country, there's a mining culture there. And like every country, it's not just the country, it's where you are within that country. So we're in Pará state, which is the preeminent mining state within Brazil right now. And then even within Pará state, we got prime location. We're next to the highway, next to the power lines, no infrastructure challenges, no national parks, no indigenous population. So it ticks all the boxes for location and where it's at.
And it's no rainforest, it's previously disturbed.
It's previously disturbed. It's farming. It's
farming land.
Called marginal farming country, cattle grazing country. And it's an area of Pará state and Brazil federally earmarked for development. Like President Bolsonaro was within 50 kilometers of the project just last week with the Minister for Development, opening up a new highway that brings infrastructure right by our project. It's just, so he's there wanting people to responsibly develop this part of Brazil.
I have covered your story before on the website, so some people may be familiar with it. But maybe you could put it into context. Like, we have a very, very strong gold environment right now. You have 2 million ounces of gold sitting there in different projects, or it's one project, but different clusters, if you could say so.
It's one ore body that we have. It's effectively one hill plateau within Pará state. It's one ore body. Just there's 2 faults. Just push one bit of it back. But we are just aiming at one corner with the feasibility study right now. But what's been really nice, just to put some of that in context, that 2 million ounces, when we took the company over 4 years ago, it was 200,000. But at that time we predicted publicly that there's going to be a lot more here, and we've gone out and done that, and we've hit every target we've expected to hit. So we've gone from 200,000 ounces. I think the next resource was 1.3 million, 1.5 million, 2 million. As we work around drilling more and more of the asset.
And where are you going to? How many million ounces?
Yeah, that's the number I would love to know. But what is nice is what allows us to do that is, you said it's different islands, but it's one ore body. So it's one structure, one basin that had gold deposit in it. And yeah, it's been folded a little bit, and a little bit's been faulted, but once you understand that initial ore body, it makes it very predictable and very simple to keep chasing the gold.
And it is really easy to process, is that right?
Absolutely, yeah, because it is just free gold in a siliceous sand matrix, so there's no sulfide, there's no clay, there's nothing else to it. It's very simple to process.
Which is really, really interesting, because 2 million is quite sizable, even if a portion of this is inferred category.
Yep.
But you're working on a feasibility study right now, and what is your all-in sustaining cost?
In the PEA that we published a year ago, the all-in sustaining was just under $700 an ounce, so it's really low. You know, I mean, I think there'll be some creep as we use higher metal prices that will lower our cutoff grade and your costs go up a little bit, but it's going to be low cost because it sticks out of the ground. It's very shallow. I mean, we're only drilling 100-meter holes, which is just scratching the surface in modern mining terms.
Would it be open pittable in this environment?
Okay. Absolutely. It's just open pit and very simple process.
What can you tell us about shareholders and the share structure and so on?
Good. Yeah, I mean, it's really nice right now. What we've seen is we've been attracting some really good quality shareholders. So, you know, US Global, which is Frank Holmes out of San Antonio, Texas, have nearly 18% of us. Gold 2000 out of Zurich have just under 10%. RBC, Rebecca Canada, up here in Toronto, have 6%. So they're really good quality names run by very, very good technical project managers who understand assets and mining. So I think that's one corner with the institutions. And then last year we sold the 1.5% NSR royalty to Royal Gold. Again, it's like the Rolls Royce of royalty companies who come in, do a lot of due diligence, and don't put money in lightly. You know, if they come in, there's a reason for it.
Could you explain the royalty deal a little further? What does it mean for you going forward?
Okay, yeah. So last year, obviously, the markets were a little tougher than they are now. It's not easy, but they were tougher. So we needed to raise money to do the pre-feasibility study. To raise it in the market would have meant a lot of dilution. But going to Royal Gold, selling the NSR, so they get 1.5% of effectively the revenue of the gold, any gold sales. And they put $8 million in now to earn that right. It's really good for our shareholders because it means no dilution in that transaction. And with the margins we have, with that all-in sustaining of under $700 an ounce, it doesn't hit the economics. It barely moves the economics. So it's a win-win for our shareholders. You know, they didn't get diluted. Projects getting advanced. We're adding value, and the hit to the economics of the project is almost negligible.
Speaking of adding value, what are your plans for 2020?
This is the exciting bit. So, as I mentioned, the feasibility study is on what we call Esperanza South. So we always think we've got about 19 kilometers of where we have gold-bearing conglomerates breaking the surface, outcropping. The feasibility study is on 6 kilometers of outcrop. We've just chosen one area. Okay, this is it. We're going to put a box around it, do the feasibility study there. We're doing a deal with Gold Spot Discoveries where we're exploring the rest of the asset. So we're going to look at where the conglomerate's breaking the surface. And then maybe more excitingly, we're going to look at what happens underground, where it's not breaking the surface, where we can't see it. There's some very interesting geological models on concentration of gold at that depth. So we will be looking at that this year. So that work is ongoing now, and we'll have a very steady news flow, probably starting late March, April time.
Has there ever been exploration work on the deeper levels? Do you know anything about this, or could there be a feeder zone, or could your current projects, which you know of with the gold ore bodies, could they be a lot deeper than you actually know?
Well, we believe it's the ore body as we know it. As I said, it's one ore body that's been folded into a bowl shape. Yeah. And in general, we've got a conglomerate which is maybe 300 meters thick. And there's bands in it of high grade, which is what we're chasing now for the open pit mining. They may be average 5-6 meters. What we're looking at underground or deeper, is where the bottom of that bowl has been intruded by granite. and that granite remobilizes the gold. So it takes all the gold that may have been in a 300, over 300 meters, it's low, maybe 0.1, 0.2 grams per ton over the whole thing. You take all of that and concentrate it into 5-10 meters. It doesn't take much thinking about to realize that you'll have quite a high grade at that zone. And what's happened, we've hit exactly that sort of thing on the peripheries, on the sides, where we have the granite sort of sticking little fingers up, and concentrating gold around those dikes, around those intrusions. And that's what got us excited, because we noticed when we hit the granite, if it's gone through a gold-bearing zone, it's sort of dragged the gold around it and concentrated it around it. And we've hit that. We hit some nice high grades, and we're like, okay, if it happens here where you've got 30 centimeters of granite, what happens where you've got 300 meters of granite? So that's really what's got us onto this target. But the potential for it is, if it's there, it's big, because we're talking 5 or 6 kilometers square.
I'm a shareholder, full disclosure, and
So am I.
I really I appreciate that, and I like having exploration potential. But when we focus about what you currently have on your resource, what impresses me is the numbers, like the capex numbers, which you might highlight now, and the IRR that results of that. Yeah,
that is the nice thing. So we've got this wonderfully exciting potentially exploration, but we are doing a feasibility study, independent, world-class engineers. And the PEA that we had 184 million capex, so it's a manageable number. Rate of return was pre-tax was 51%. So I mean,
2 years payback.
2 years payback, all-in sustaining under 700. Really, and the idea is to take that and upgrade it, and so it's nice to have something real and a lot of blue sky upside.
Okay, but what is your exit strategy? Do you want to develop it yourself? Would you consider selling it or joint venturing it, or let other people who are miners do the work, or what's the plan here?
I think the best possible plan for our shareholders, you and me, is that we do find a skilled team who can permit and build in Brazil. Now, how they come in, it's just a business negotiation, whatever's best for the shareholders, whether it's a joint venture, a merger, a takeout. I'm really agnostic on how it works, but I just know that there's a better team out there. Well, there's things that we don't have that team now. You can try building it up from scratch, but that's tough to do.
Fair enough. Yeah.
But
and we talked about this before the interview. We are in the beginning of an M&A cycle. We're in the middle of it, and we have seen major takeovers and mergers so far. And I think the next steps would be the mid-sized companies and some smaller companies. 2 million ounces is quite sizable.
It's quite sizable, So, and I think, as we said,
they might get some attraction to it.
Well, and with these metal prices, anyone producing gold is probably making a lot of money now, and they've cleaned up their balance sheets over the last few years, so they will be looking. But it's got to be the right deal, and I would love to stay involved with it somehow. And keep my shareholders with that upside, because we do see a lot of upside here. So if there's some way of doing that, that would be wonderful as well.
Great. Anything else you would like to add? I forgot to ask, Nick.
No, it's going to be an exciting year. With the feasibility coming out, that exploration, the Gold Scott discoveries work. There's going to be really good news flow. It just feels like it's going to be a really exciting year.
Good closing statement, Nick. Thank you very much for the interview.
Thank you very much for having me.
This was Nick Appleyard, President and CEO of TriStar Gold. If you want to find out more, I will link below the video the company homepage and some of the coverage I did on TriStar Gold. Thank you.